Hi there, good afternoon. You're watching Market Fatafat on ET Now. I am Snehisha and with me as always is Ankita Saxena. This is a show where we'll be taking you through all the big buzzers in today's trade, either on the back of individual news flows, brokerage notes, or on the back of technicals, and also tell you why these stocks are buzzing. We'll be doing all of this in under a minute. Before we do that, let's take a look at what the markets are up to right now. And we had crossed comfortably above the 22,100 mark. We're there, but we're barely holding there. But nonetheless, it's been quite the recovery from the day's lowest point.
Absolutely, see, quite the recovery. In fact, at one point we were testing those 22,000 levels. Absolutely. And that was a scary part. But we've managed to pose a decent recovery as far as Nifty is concerned. We are up almost 137 odd points from the day's lows. On the Nifty, it is absolutely flat right now in the red, but nonetheless a recovery. Nifty Bank is reeling under greater pressure. In fact, that is trading with cuts of almost 257 odd points. It's down 0.5% right now. There is a recovery on Nifty Bank, but nonetheless it's trading with heavier cuts and is reeling under selling pressure. The broader markets, of course, are seeing sharper cuts. In fact, Nifty mid cap is down with cuts of 0.5%. Nifty small cap is also down. It's down almost 1% in trade. So Nifty small cap is really taking it on the chin, and as it has been for a while. Sectorally, barring Nifty IT, which is bucking the trend, trading in the green. Rest of the counters are trading in the red. In fact, Nifty Media, Energy, PSU Bank, Metal, these are the counters that are reeling under a lot of selling pressure right now. From the Nifty IT pack, you have Wipro and LTI Mindtree that's really leading the pack from the front, trading with gains of almost 2% in trade. So Nifty IT, after those sessions of decline, is seeing a recovery today. IT is in the recovery mode as of today's trading session. But besides that, we also have the auto pack that is in focus today on the back of the auto sales numbers that came out. We'll take you through the details of that through the show. We also have Ultratech Cement, Polycab, SBI Life in the back of those brokerage notes. But largely, that's how the market is shaping up. But we'll take you through why the stocks are buzzing in trade, Snehi, now.
Absolutely, lots of stocks to talk about. We'll try and squeeze all of this in the next 30 minutes. On that note, let's get kick-started. Welcome our guest on board today, who is Sameet Chavan, Head of Research, Technical and Derivative at Angel One. He's going to be joining us. He's here, in fact, for the technical outlook on some of the stocks that have made it to his radar. And from our in-house research team, we are joined by Rabinder. Good afternoon to both of you, gentlemen. Let me start by talking about a stock that's tanking away in today's trade. And no surprise, a lot of stocks are tanking away. But nonetheless, this Ola Electric that I'm talking about, more than a 3.5% cut is what the stock is seeing right now. Because we understand from agencies, or rather specific Bloomberg, that Ola Electric Mobility is looking to lay over 1,000 employees and contract workers. This is what people familiar with the matter have said to Bloomberg, as one of India's top scooter makers races to pare ballooning losses. The cuts at the company span across multiple departments, including procurement, fulfillment, customer relations, and charging infrastructure as well. Remember, this is the second round of layoffs in under 5 months, as the Bhavish Agarwal-led company, which just listed in last August, battles crises on several fronts. It's posted a 50% surge in losses for the December quarter and has been censured by India's market regulator and Consumer Protection Authority time and again in the recent months. So the trouble continues at Ola Electric. Around 500 employees were laid off in last November. This is according to local reports. And the current round of layoffs amount to over a quarter of Ola's 4,000 employee size as of end March 2024, but includes contract workers that aren't counted in the company's public disclosures. So expecting this number to be over 1,000 employees that are going to be laid off. Unfortunate news coming in, but also negative for the company. A 3.5% cut is what the stock is saying.
All right, Ola Electric reeling under pressure on the back of those layoffs. But coming to you, Sameet, you picked up BEL for us. Now, this one is the top Nifty gainer for today. It's trading with gains of almost 3.8% in trade. But this stock is down almost 30% from its 52-week high. So from here on, do you see buying coming on dips for this counter?
It is the case with most of the PSU counters. They have corrected sharply. But comparatively, the stock has corrected lesser, and it seems that since last couple of weeks, this stock is finding some support around 240 to 35, which is the key support zone for this counter. Today we are seeing a good traction in this counter since morning itself, and if you look at the overall volume activity, it has been quite robust. So once the stock surpasses first hurdle of 260, 262 on a closing basis, wherein you can see 89-day exponential moving average as well. So about 261, this stock can give a decent pullback, move towards 278, even towards 280. So as of now, it seems that the recent fall has been arrested. Stock would see some consolidation and then probably a slight hint of giving bounce back towards the.
All right, moving on from BEL, that's in focus today on the back of technicals, and moving on to the next counter, which is PFC, that is in focus today. That is a big upgrade coming in from CLSA. It has upgraded the counter to high perform outperform from the earlier outperform. In fact, it's up and away 4% in trade amid this market. They've set the target price to 525, which was earlier 540 rupees. Now, they see that 59% of the past, 2.5 year sanctions are undisbursed, and this alone could support the double-digit to mid-teens loan growth over FY26 to FY27. And also amongst the leaders, PFC continues to have the best delivery on loan growth, ROE and dividend yield. Any concern over the asset quality should be limited, as lenders in the current capex cycle are focused on approvals and agreements. And on the back of that, they have upgraded PFC to a high perform outperform rating from an earlier outperform. On the back of that, PFC is up and away 4% in trade.
Okay, PFC is doing well, but its counterpart, the stock we always mention with PFC, REC, is also doing pretty well on the back of this brokerage upgrade coming in for this stock as well. And Sameet, you've picked out REC on the charts. While the stock is holding up decently today, last 6 months it's seen a cut of 40% coming in. Last 1 year also a 20% cut coming in. Year to date, it's a 25% decline on the stock. Do you believe the stock has corrected enough now to merit a fresh entry? Is it looking good going ahead?
Whether it's a bottom or not, that will be too early to take that call. But at least for a time being, we are seeing a strong support around 350, wherein the previous important resistance were there. It would now act as a strong support, and we had seen previously a breakout point somewhere around in December 23. The rally starting from this particular level itself. So stock has corrected back to that important support level, and today we are seeing good traction, and importantly, the stock has now surpassed its previous day's high, which is a first sign of some relief. So at least in next couple of days' time, we can see a good pullback move towards 400, 405. But if the stock has to confirm this near-term bottom, it has to surpass 450 on a day.
All right, that is REC on the charts. But coming to you, Rabinder, Polycab is the name you've picked out for us. Another brokerage candidate here. Tell us what does the brokerage note say?
Well, as Jefferies has come out with the note on Polycab, where they have maintained their buy rating with target price of rupees 6,485. They says that the Polycab leadership in the organized market with the 25% share remains strong, and Ultratech cement entry into cables and wire is unlikely to impact it until 2027. The target PE has been rationalized to 32 times due to market adjustment, but the prospectus remain intact. They say that while higher competition and a potential demand slowdown pose risk, exports are emerging as a key opportunity, which is supported by China 1+ strategy. And looking ahead, new orders and improvement in FMEG segment are expected to drive strong growth, with sales and profit CAGR projected at 22% and 28% between FY25 to 27.
Okay, Rabinder, thanks for all of that. Jefferies positive note coming in. The stock is doing higher by 3% in today's trade. Moving on, Sameet, coming to you for Voltas. Now, while the fundamentals look supportive, given that summer is almost here, in fact, it is here, and talk to us about what the technicals are looking like, because last 1 year, the kind of momentum the stock has seen, last 6 months has been a sharp reversal of that kind of growth. Now, what's the charts? What are the charts saying for Voltas? What's the outlook going ahead?
In fact, this stock has been bucking the trend since last couple of weeks. Time we have seen a massive broad-based sell-off in the market in last 5 to 7 trading sessions, and this stock has been moving upwards. And today, when the broader market is sideways, this stock has already surpassed its 20-day exponential moving average place around 1350, 1355, and it is showing some sign of strength. So from here on, 1450, 1455. These are the next important levels to watch out for. And as a disclosure, we have recommended this to our clients 15 minutes back through call options. So 1400 call option also looks good. So those who are option traders, they can certainly look for a 1400 strike price call option. And in equity, if you see stock has already surpassed important levels, 1400, 1420, these are the next important levels to watch.
All right, that is Voltas on the charts. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back with some more stocks on the other side. Stay tuned.
Hi there, welcome back to Market Fatafat. Let's keep it going with all the stocks that are in focus right now and talk about a stock that's gaining on the back of a news flow that's come in a couple of hours ago. A 1.5% uptick coming in on L&T on the back of a positive news flow. Now, the power transmission and distribution vertical of the company has won new orders in India as well as overseas. For context, a large order is categorized as an amount between 2,500 and 5,000 crores. And this is the category of orders that the company has bagged in India and abroad. Now, in India, it has won an order to implement 765 kV and 400 kV transmission line segments associated with the renewable energy zone in Uttar Pradesh. Now, prior to this, the business secured an order for turnkey construction of a 400 kV transmission line meant for evacuation of power from a non-fossil fuel-based power plant in southern India. Globally, in Saudi Arabia, it has won an order for a 380 kV gas insulated substation. And other than this, also in Abu Dhabi, the business has received an order for setting up a new 220 33 kV grid station along with associated jobs. So, strong order win coming in, large category anywhere between 2,500 and 5,000 crore rupees. The orders that the company has bagged. On the back of this, the stock is up 1.5% as we speak.
All right, moving on from L&T to the pharma pack. Lupin is what you've picked out for us. Sameet, tell us what do you see in the charts for this one. In fact, this counter is also up and away at 2.8% in trade today. But in the last 6 odd months, it has been in a corrective phase like most of the stocks. But tell us, what do you see for this counter from here on?
See, our main criteria for selecting stocks today, those stocks have corrected recently and have reached their important supports. And since morning, there's some good buying interest. So, looking clearly falls into those categories. On Friday, we had seen a confirmation of bullish hammer pattern on daily chart. And today's move certainly validates the overall strength of this pattern. So, from here on, this stock is likely to give extended pullback towards a 2020, wherein we can see a 200-day simple moving average coinciding. So as of now, stock is certainly displaying the strength, and from here on, the extended move is likely to come in next probably 2 to 3 days.
All right, moving on from Lupin to the consumer pack. Morgan Stanley has come out with a note with the entire FMCG basket, and they feel that probably we are closer to the bottom of this ongoing sell-off. The valuations re-rating may require confirmation on the growth recovery, but the mass discretionary has posted better as far as recovery is concerned, whereas versus the staples. Now they prefer the F&B over home personal care segment. Also, they feel that the competitive intensity in the paint segment has increased. The D-rating is unlikely to stall. In fact, in discretionary, they're backing the leaders. Amongst the value retailers, tier 2 markets, players are better placed as far versus the metro and the tier 1 players. They're also maintaining their top overweights on ITC, Jubilant, Nykaa, Page, Tata Consumers, Titan, Trent and Varun Beverages are amongst their overweights. In fact, you can see Nykaa is up almost 0.8%. ITC is up 0.5% on the back of that. The top underweights are Asian Paints, Berger Paints, Avenue Supermarts and Nestle. So that's what the note from Morgan Stanley says. On the back of that, the top overweights are in focus today. They are buzzing on the back of this news flow.
Absolutely, consumption sector and focus on the back of this brokerage note coming in. But Sameet, coming to you, you've picked out Big Four Reliance, finally a stock from the Nifty 50 pack that everybody has been talking about, and we have to highlight the stock. It's a 3% intraday cut coming in for Reliance today. Other than that, also single-digit cuts across the last 5 days or 1 week, 1 month, 6 months. Over the last 1 year, it's given a return of a negative return of rather 20-odd%. What's the outlook going ahead? And do you think this is the worst for Reliance because the 3% intraday cut is harmful for the overall market construct as well?
Unfortunately, the stock has confirmed yet another breakdown from its crucial support of 1200, which coincides with the 200-day simple moving average on weekly time frame chart. Hopefully, this stock finds support around 1150, 1130, which is the next important swing low. So, we are hoping, since the market is oversold, in case if we have to see any kind of relief, yes, this large cap stock has to participate. So, hopefully 1130, 1150 would act as a very strong support for this stock.
All right, with that, we've come to the end of all the stocks that are in focus today. Thank you, Rabinder and Sameet, for joining us today. But let's...
If you like this video, then like, share and subscribe to ET Now.